Hi, thanks for joining me in my market report. My name is Mike, and if you haven't caught my videos before, we kind of go over what impacts mortgage rates on a daily basis. We create these videos on every single morning, typically about midday for the stock market and mortgage-backed securities. And we kind of give you a gauge as to the direction where mortgage rates are going, what's influencing them on that day. And then also we try to kind of look at the week ahead and give you an idea as to what to watch out for, what could be a catalyst, if it could be something that could negatively or positively impact rates. We kind of like to go into those aspects. A little bit about myself is I am a loan officer. I do work with a national lender. So if you guys got questions about mortgage rates, if you guys got questions about programs, uh, process, or if you're just simply looking to refinance and want somebody to look at the numbers for you and maybe or rate quote, or if you're looking to buy and need a pre-approval and then obviously the financing for the property, we're here. We can help you guys out with those. We can do loans in all 50 states. So please feel free to reach out. We're here to assist in any capacity. Without further ado, we'll start off with the economic data for today. We got a lot, as you can see by the um, highlighted areas. We'll start with the Case-Shiller home price index. So we got the first two items will be home price index. One's going to be month over month, and the other will be year over year. So the Case-Shiller month over month, back in May, it went up 1.8%. Forecast was saying same thing, same pace at 1.8%, and it continued that at forecast 1.8%. It's year over year. May was revised higher from 17 to 17.1. Forecast has gone 18.5, and it came in much hotter at 19.1 in June. So June obviously was a pretty hot month. Now we got the FHFA home price index for the month of June. We'll start with the month over month like we did before. This basically measures for single family homes for conforming limits for like a Fannie or Freddie Mac loan. This is they kind of take that data, and this is where we get those that price level. So this isn't counting like big mansions or anything like that. Just basically data that were used for conforming loan limits. So it's month over month went from 1.7 revised higher to 1.8% back in May, and this month it came in a little bit slower at 1.6%. It's year over year, went from 18 to 18.2 was estimates. I'm sorry, not estimates, but it was revised higher for the month of May. But it did come in much higher at 18.8, even though the month over month doesn't look like it indicated that. It year over year had a pretty big jump from 8 to 18.8. Now we also got Chicago PMI. This is manufacturing in the Chicago region. Anything above 50 is considered expansion or growth, and as you can see here, we're well above that. So in the month of July, we had a pretty high number at 73.4. Forecast is con for 68, and it dropped much lower down to 66.8. So we did see this in some other areas like the Empire State Index, which is the New York region. So we are seeing some slowdowns for the most part around the country here, especially in the month of August, as we've seen the Delta variant increase cases, increase and more restrictions coming in. So this is something, of course, what's on investors' minds. They are kind of watching that, and of course, the Fed is also, as they've said, they're watching this as well, see how much impact it might have on the economy, if it might lead to more closures or whatnot. So, last but not least, we got the consumer confidence for the month of August. So back in July, we had 129.1, but it was revised lower to 125.1. Forecast is kind of for 124, and it dropped much more than that, down to 113.8. So people weren't feeling as well in August as they were the previous month. Let's take a look at the headline news right now, and so far stocks are mixed. They're trying to wrap up the month with a good month. Overall, they'll probably do well, but today not as well. Um, Nasdaq and S&P are both in negative territory, and basically the Dow is just kind of hanging by a thread in positive territory. It started off, of course, let's start off with China. They had some poor manufacturing and services numbers that came out. Their PMIs came in pretty not so good. Manufacturing's just barely above 50, and their services sector actually, which surprised people, actually dropped into negative territory, so contracting area. Then we got to the EU. They came out with a little higher inflation data than expected. They came out, I think it was at 3% year over year, higher than the 2.8% estimates. and of course that wasn't very bond friendly, so that will had a little bit of a negative effect, which we'll see here in a bit on our mortgage-backed securities. Um, and there were some comments out of the EC saying that they might kind of follow along with what our Fed is talking about, basically start the tapering process for their programs over there, pull back on some of their programs, and kind of most likely doing the same thing what we're doing, basically stop decreasing their purchases of their bonds, basically. Let's take a look, see how this is impacting mortgage rates today. We had a pretty good day yesterday. Here's 25-day moving average. We did start off the day much lower, kind of like where we were yesterday. We're up, as you saw, but since then we pulled back. We're just barely above the 25-day moving average. We're down to 8 basis points. Some lenders will be coming out with pricing, depending on when they came out with pricing. Some lenders may have already came with a little negative pricing. They might just be, they may come in a little more conservative. Others may come out with about even pricing, unchanged pricing. But for the most part, it looks like it could be kind of more of a negative day on this. Same thing with yields. Yields have jumped up a little bit, climbing back above that technical level after even touching the 25-day moving average and swinging more negative, and going to 131, 1.31 right now. On that note, so again, tomorrow we'll get the first data of the jobs reports. We'll get the ADP. It doesn't have the biggest impact, but they do kind of watch that. It brings out the private payrolls, and then Thursday we get every week the initial jobless, getting some people applying for unemployment, and then last they'll have come out with the Bureau of Labor statistics for the month of jobs. So we'll see the unemployment rate and also the non-farm payrolls. What comes in the last 2 months were came in pretty hot, so we'll have to wait and see if these will, if that translates. The Fed will be watching the jobs report. They do have a meeting later in September, so that's why this will be important, as they want to make sure we get to a point where if they don't, they're not pulling the tapering too soon. So that's what their concern is. So they'll be watching this data. All right, so I hope you like the videos. If you do, please smash that like button. It certainly helps us out. We greatly appreciate you. We appreciate your watching, and your participation. Again, if you guys got questions, please reach out. I'm here, and I'll be more than happy to answer what I can, and or get information if I don't know it. We'll make sure you guys are taken care of. Appreciate you guys. Thanks so much for watching, and we'll see you guys in tomorrow's video. Bye bye.